Good afternoon, guys. It's working. Bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollars as the 4-hour chart on Coinbase, and this is just going to be a very, very quick update on Bitcoin, guys. The detailed analysis that I gave was just about on the last video was about a couple hours old. Still is relevant. Price hasn't moved all that much. This video is more to answer your questions and your comments, and we're going to talk about a couple other things. And I'll quickly give you a Bitcoin analysis, guys, but it's not going to be in depth. Like I said, go watch the prior video if you'd like some more in-depth analysis. Looking at Bitcoin to the US dollar 4-hour chart on Coinbase. Last time we spoke, guys, Bitcoin was basically operating exactly where it is right now. We do have this very relevant descending resistance line that I'm watching very closely, as well as this $11,500 zone. The major pivot points for me is going to be this 11,500. If we can break above it, that's certainly going to get my attention, but it's until we break this descending resistance line here, that's when I'm going to start to possibly look into front running this thing. Certainly if we do break above 12,000, that's going to be a decisive break. I want to clarify, a decisive break above 12,000, a 4-hour open and close above 12,000. That's when I'll very, very likely front run this thing, and I'm going to be looking for a continuation to the upside, very likely targeting at least 13,000, more likely this 13,500 to the prior high of $13,880 up there. So that's what I'm going to be watching for. Again, guys, if you want, but technically, if you want to be a lot more conservative, the chart isn't going to give you a continuation trade until we do break above about 12,400. What I mean by that is you're not going to get technical analysis does not confirm a continuation to the upside until we decisively break 12,400. Well, really 12. What is it? 12. Let's just 12,400. A decisive break above 12,400. That's when you're going to be your confirmation to go in long. But in my opinion, I'm going to probably be going in long. And again, guys, be very, very careful trading my opinion. That, I do that because I can change my mind last minute. I'm trading in real time. If you try to go based on something that I said, hours ago, things can change very, very quickly. But just what I'm looking at, what I'm looking to front run, if we can clear 12,000, I may front run if we get above this, if we decisively break above this descending resistance line, depending on volume, depending on how we break up above it, etc., etc. And I also want to see how price reacts if and when it breaks above 11,500. Are we shooting through it, or are we just slowly breaking above it and then consolidating right below it? It'll be very, very different. To the downside, so those are the areas I'm watching. To the upside, to the downside, guys, of course, I'm watching this $10,650 zone as we discussed on the last video. If we do break below this zone, guys, I do think very likely it'll be a quick drop to about $10,000, $9,950. Now, the only saving grace to that would be if I pull out here on the daily chart, we do have this ascending support line that's been in place since August. Or I'm sorry, since April, not August. Since April, it has been respected very, very well. Came back down here and tested on July the 2nd. Bulls were able to push it right back up. So I do think that's a very, very relevant trend line there, guys. So watching this ascending support, watching this descending resistance, a break of one of these two would very, very likely be significant for continuation to the up and or the downside, depending on which one we do break. So breaking down below this, guys, am I going to scalp at around 10,000? Will I try to get a scalp off this ascending support line? Possibly. We'll have to wait and see kind of how we play, how this ends up playing out. Certainly, I'm paying attention to the fact that we have, if we go from our swing low to our swing high, we can see that that $10,000 mark is perfectly lining up with our golden ratio right there at the 618. And of course, we can also see that we came down and tested right inside that golden pocket on that collapse on July the 22nd, and the bulls were able to push it right back up, getting a lot of confluence between that, if we were to break out right now, between that, the $10,000 support, and our ascending support line there. So all of that would come into play. If we did break down right now, I would likely look for a scalp. Now, if it doesn't break down right away, if we wait another, another 12 hours or so, then it might be a little bit different. We'll have to watch and wait and see kind of how this ends up playing out. But those are the zones that I'm watching very, very closely. Of course, if we do break down through 10,000, 9,400 is going to be a very, very quick target. And that's where I may start laddering in buy orders, adding to my long position. And I very likely will add to my long position from 9,400 down to and including 8,500. 8,500, for those of you that missed it, you must have missed every single one of my prior videos. But just in case you did, we do have that gap on the CME chart at about 10,500, between 10,500 and 88.70. This gap very likely will end up getting filled at some point. Doesn't have to get filled right now, but it very likely will end up getting filled at some point in the future. Personally, I would like to see us come back down here in a healthy way. I don't want to see us breaking down to it, but I wouldn't mind seeing us in a nice healthy way coming back down and refilling this gap before we continue to the upside. That just because I want that, though, Bitcoin does not care what I want, so we'll have to wait and see kind of how this ends up playing out. But those are that's what I'm watching for now. Let me go ahead and get to your comments here. All right. Samuel Lord says, thank you so much for posting every day. I can't thank you enough. Hey, thank you, Samuel. I appreciate having you here, man. Thanks for the kind words. Payment21 LLC says, many thanks for your content. Our traders have nicknamed you Workin' Crypto Navy SEAL. Thanks, man. I'll take that as a compliment. Tricky question. What is a good bandwidth for setting stop losses in a uptrend without getting hit by those dropping wicks? Or getting hit by dropping wicks quickly? That's a good question, and really that is the $20,000 question, if you'll excuse the pun. It's not as simple as telling you that. Now, I'll give you two different answers here. The simple, quick Investopedia answer is going to be, you're going to look at the, obviously it depends on what you're talking about. We're talking about scalp trading, swing trading, day trading, holding for the long haul. What kind of a trade are we talking about here? That being said, typically the general canned answer is going to be, you're going to, let's say that I want to go short here. Let's say that I think Bitcoin is going to end up breaking down from its current price point. So I'm going to, first of all, I need to figure out where my entry is going to be. My entry is going to be from the prior area of, in this case, we'll be looking for a prior area of resistance, since I'm looking to enter into my position here, basing on a short, selling up here and buying again down here. So looking at that, the next major area of resistance was 11,500. So I'm going to look for at least a break up to 11,500. That's where I'm going to want to enter my short position. And again, I'm not telling you to do this. This is just an example. I'm not telling you to do this. Let me be very, very clear. This is just an example. So if assuming that I wanted to enter my short at 11,500, where am I going to enter my stop loss, assuming that does get filled? The typical Investopedia answer is going to be, you're going to look at the prior wick of the prior structure, and you're going to put, the prior candle on the prior structure, and you're going to put your stop loss right at the body, right at the closing of that prior structure. So that would put it right here, right around $11,871. That is not where, that's where retail is going to put all of their shorts. That's not where, or all of their stop losses. That's not where you would want to, in this case, put your stop loss. Now, the next level up is the people that consider themselves better than retail. The guys that have been trading in this market for a while. They're not, they're not professional traders by any stretch of the imagination, but they have been trading here and there, and they do believe that they are, they probably more than likely believe that they're a little better than they actually are. They're going to put their stop losses at the wick. So they're going to look up at the wick. They're going to put their stop losses right at that wick, thinking that they're being geniuses. Again, that's not where I'd put my stop loss. Where would I put my stop loss? I would look at the wick of the prior structure, and I'd go 0.5% higher than that wick. And again, this all depends on how much risk you want to take as well. This, again, I'm giving you a very, very general answer here. So you're going to want to look at that at the wick of the prior structure. In this case, that wick is sitting at about $12,045. You're going to want to add 0.5% to that, just above that wick, and that's where you're going to want to place your stop loss. That's where the majority of the smart money is going to place their stop loss. Now, if you place your stop loss at the body or right at the wick, anytime market makers go stop hunting, you're going to get stopped out every single time. And by stop hunting, again, I know I have all different levels of people listening to this, so I apologize for those of you that already know this. Please indulge me. But if you're market makers, when they go stop hunting, that basically means if price is going to get driven down, they'll run price right up, try to liquidate stop losses, try to liquidate short positions, and then they'll let price drop. Opposite is also true. If price is going to get driven up, oftentimes you'll see them run price down very briefly, try to liquidate or try to hit stop losses, and then drive price up. Or sometimes you'll see a candle where price just moves up, moves down, and then settles right back in the center again. That's a major stop hunt. So that's kind of, I know that's probably not the answer that you're looking for, and without giving me a particular trade setup, it's very, very difficult to tell you where to put your stop loss. If I'm looking long, if I'm looking for a swing trade, if I'm looking to hold position for, let's say, a month or two, where would I look for an entry? Where would I put a stop loss? I'd probably start looking for an entry somewhere around 10,000, and I'd probably ladder into that position between 10,000 and 8,500. Yes, I realize that's a major gap between 10,000 and 8,500. I do realize that. I do realize that's a huge area to ladder into. And if I was laddering in, I'd probably start off with about 20% at 10,000, about another 30% at 9.4, and then about or excuse me, about another 20% at 9.4, another 20% down here at the next major stop, at the next major level of support at about 8.9, and then of course I'd put the remainder down there at 8.5. That's laddering into your position. That's what I would recommend in a situation like this where you have numerous areas of support right below, and you're in a very, very uncertain environment whether or not we're topping out. But if I'm looking for just typically, if I was looking for a position here, if there wasn't these very, very clear areas of support below here, and I'm looking for a long swing, a more of a swing trade, not a long-term hold, but more of a swing trade, and I'm wanting to go long, yeah, I'd probably come back down here. I'd look for an entry somewhere around 10,000. I'd come down here to the prior wick. All retail is going to put their stop loss right there at that wick, and I'd put my stop loss right below that wick somewhere around 9,500 rather than 9,650. Just as an example. Now, would I actually take that trade? No, because I know right below that I have major areas of support sitting at about 9,400 that price could come back here and just bounce very, very nicely up. So why would I put a stop loss $200 high of a major area of support? If price did break down, I'd very likely get a nice bounce off that. So this is why it's a little tricky to give you an answer based on this particular scenario, but hopefully that does help you based on whatever scenario you happen to be looking at in the future. All right, JK says, damn thing went down, price range as predicted, but direction a little bit off. LOL, computer. Yeah, we were talking about computer security, JK, and yeah, I'm really a stickler for that. I apologize, guys. I can't click on many links. My security settings won't let me, and yeah, I've got to get through 2 different people and a firm before I can even access a lot of my crypto funds. So I'm extremely paranoid. Let's see. MaxDap says, great videos. I can see this channel going to 100,000 subscribers over the course of this bull market. Good, honest TA. Hey, thanks, MaxDap. I really appreciate that, man. And it's good to have you. I've seen you comment a few times. Dan Hellman says, yo, man, you and Crowns Crypto Cave are the best on YouTube. Great work. Hey, thanks, Dan. I really do appreciate that, man. Let's see. Bilbo Shaggins. Bilbo Shaggins. That's great. That's a great name. Can you please not turn down your intro? Please keep being you and just be you. Hey, thanks, Bilbo. I appreciate that, man. Yeah, that was in relation to somebody asking me to turn down the volume on the intro video, saying it was different in relation to the volume on the actual analysis. If you guys find that the case, please let me know. I didn't find that to be the case, but I might, maybe that's just me. So if anybody else does have that complaint, please let me know. AALS says, thanks, working, stopped losing money because of you. God bless you and your family, brother. Happy 4th. Hey, happy belated 4th to you, man. I really appreciate that, and thanks for letting me know, man. That really does mean a lot. Let's see. Radicus says, what's your background? Are you a professional trader or analyst? Well, I'm not a professional trader. I'm not a professional analyst, depending on how you define professional. My background my degrees are in business and finance. That is my educational degree. However, that is not my professional background. My professional background is I'm a retired airline pilot. That being said, I have been trading for many years. Only seriously day trading for probably about the last, probably about the last 6 years or so. I did have I don't want to get too personal here, but I did have a medical issue about 6 years back. Gave me a whole lot of time to do nothing but study and hone my skills. Like I said, I've been trading for a very long time, but only day trading professionally and profitably for about the last 5 years. As I said, that medical issue gave me a whole lot of time to do nothing but research, nothing but hone my skills, and it's amazing what you can do. Again, this isn't a woe is me story by any means, guys. I'm doing just fine. But yeah, it's amazing what you can do when you have a medical issue and you're just have a whole lot of time on your hands. It's amazing what you can do if you dedicate yourself to a particular task, how you can hone those skills. Like I said, I would recommend reading everything that you can read, and I would recommend paper trading, and of course, then practicing. Make sure you're trading with paper before you're trading with real funds. Once you can become profitable paper trading, then you can start dipping your toes into day trading. Now, people can be profitable, investing into this market without question, but it's the very few that will consistently make profits day trading, and most people won't. And it's not because they're not smart enough, it's just because they don't want to put in the work. It requires a ton of work, and believe it or not, every bit, as much as the technical side is extremely important, every bit as important as the psychological side. So I gave you guys some recommendations on some books in a prior video, in the comment section on a prior video. I believe it was my last video. So if you want to go look those up, guys, by all means, go check it out. And if anybody else does have any questions on a good book that they would like me to recommend, I'm happy to do it. T. Grubble says 935 BTC sell wall at 11,200 on, or 11,220 on Binance, chewed through at or around 11:30 p.m. Pacific Standard Time. Wow, a mission in player. Yeah, be very, very careful trying to trade those sell walls, guys. This is a very manipulated market, and it's a very unregulated market. That means if you're trying to trade the sell walls, guys, whales, trust me when I tell you this. I talk to a lot of people. I know a lot of people that are market movers, and that's not me name dropping. That is just me. This is just basic. This should just be something that you should know if you're trading this market. Do not trade the order books. The order books are extremely manipulative. The order books, people will put up huge buy orders and sell orders just to take those down. Just because you see a buy order or a sell order, just because you see a massive buy wall or sell wall, does not mean that that is going to get executed. I can put up a buy wall or sell wall all day long and then just take them down without them being executed. So please, 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 this is why it's so important to make sure you're understanding the psychology of trading, because if you're trading on sell walls or buy walls, you're going to get wrecked. So be very, very careful doing that. And that is not me talking down to you, T. Grubble. That is truly not me talking down to you. Please don't take it as that. Please don't take any offense to that. I only say that because I've seen I know too many people that have tried to trade the order books, and it's just I don't want to say it's impossible. If you know what you're looking for, you can kind of spot what's a fake wall and what's not a fake wall. But I don't even want to get into that. The bottom line is, don't trade the sell walls or the buy walls. Just ignore them. All right. Peter Claus says, thanks, dude. You're welcome, Peter. Amy Fulmer says, any thoughts on Litecoin? Yeah, let's take a look at Litecoin. All right, taking a look at Litecoin. Yeah, Litecoin does look like it's certainly consolidating within a wedge. We're creating a series of lower highs, higher lows, approaching the apex here, and it looks to me like, let me go to the daily. Yeah. Yeah, I can't decide whether or not it's going to decisively break. Or yeah, this is kind of what you expect. Yeah, it looks to me like it's very likely going to break out in the next 3 days. Now, we are going into a weekend, so that may put the breakout on Monday, although it could literally break out at any point in time, guys. It does look to me like it's getting squeezed tighter and tighter here. We are below the 21-day EMA. That typically would be, let me look at the RSI. Yeah, RSI is fairly neutral. Let's go ahead and look at the daily. Or excuse me, the 4 hour. 4 hour is creating a decent area of support right here. I would say if the 4 hour RSI does break down below this support, things could get ugly. Now, I don't mean just slowly dipping below it, but if we get a quick, nice, violent break right below that RSI, things could get very, very ugly, very, very quickly. I would say. Let's see. We are finding support right on top of that 110. 110 is still very relevant, guys. If you remember back in 2018, 110 was basically that major area of support before Litecoin just completely broke down here to those new lows. 110 is acting as a decent support as of right now. Pardon me. And let me just pull the fib on this. If I remember right. Well, let me just see before I say anything. Yeah, we're dancing right on top of that 382. Wicking down below to that 110. Let me see what if I can see some of it on a smaller chart here. Just kind of see if we can figure out what bots are doing, what some bots are doing anyway. Now, not showing us too much. So yeah, I would say, oh, sorry about that. Damn it. Okay, yeah, I would say if this thing does end up breaking up and we get if we get a daily candle closing above the 21-day EMA here, which would bring us right outside this this little wedge pattern that we have here, which likely are just going to keep going up, I would watch for a possible bull trap at around 130, 133-ish, somewhere thereabouts, guys. So if this thing does break up, be very careful about that zone. I would not get greedy until we do get up above about 140. If we get up above 140 and get an open and close, a daily open and close above 140, in fact, possibly even a 4 hour. Let me take a look at this. Yeah, I might even accept a 4-hour open and close above about 140. I think things could get very, very bullish very, very quickly. If you did want to front run a breakout here, again, I'd be very, very careful. If you're looking to play this breakout and you think it's going to break to the upside, which again, I have to say that I would be fairly agnostic on this. I do think this is going to follow Bitcoin, and it's also very much in a consolidation pattern where it could break in one direction or another. If I was going to go long on this, I would very likely, depending on how much risk you want to take here, man, it really does depend. I would have a pretty tight stop. I wouldn't take this trade. I just don't think I'd take this trade until I had a little bit more confirmation. That being said, if this thing does break up above about 125, maybe you want to go long to about 130. Again, a very, very, very quick scalp trade, guys, but I would increase my stop loss very, very quickly. I'd make sure that I was sitting right by when I did it, knowing that that could be an area of a reversal if this thing does end up being a bear trap, or excuse me, a bull trap. To the downside, I'd be watching a breakdown to about 110. If 110 is where I'd be watching for that possible bull trap, or excuse me, bear trap. Sorry, guys, keep confusing the two. A breakdown, watch out for a possible bear trap at about 110. What that means, price breaking down, trapping people into their shorts, and then immediately reversing course right around 110. If 110 does break down, it is going to be a very quick drop down to at least 100, and I'd be watching, pulling out here to the daily, I'm going to be watching this ascending support line that has been in place since basically January. I'd be watching for a support right around that ascending support line. So very, very careful. I don't know that I would play Litecoin. I'd probably, if it, like I said, if it does break down here to about 110, I would be looking for some potential support here, maybe picking up a nice little bounce off of about 110, just a very, very quick scalp trade. Nothing more than that though, guys. And yeah, a break down below 110, again, quick drop down to about 100, if not this ascending support line here. Now, where would I be an absolute buyer of Litecoin? 190, 91. I'd absolutely buy Litecoin around 90, 91. In my opinion, that'd be an excellent place if you can get it there. If it does get down there, not saying it's going to, that'd be an excellent buy if we can get it down there. Again, that'd be, I'm not saying it's going to get down there, guys. I'm just saying that if it did, that would be an area to be very, very, very interested in buying Litecoin. And actually looking here at the weekly, man, looking at the weekly, I'm tempted to want to scalp it at about 110 if this thing does end up breaking down. I'd be very tempted to scalp it at about 110. And again, a break to the upside, again, watching about one, and looking at the weekly, I don't know. If this thing does break up, I might even target about 135. I don't even know that I'd get out at about 130, possibly targeting about 135 if this thing does end up breaking up. But be very, very careful here. Anytime you're playing a wedge like this, this truly is an equal opportunity breakout to the up or the downside, guys. And unless you're just hedged in either direction with very tight stop losses in either direction, oftentimes it's just best to let this thing end up playing out. Now, I know a lot of people are asking about Litecoin because they're concerned about the halving going forward. Remember the last time we had that halving, guys? We had price breaking up here until 2 months prior, and then price kind of collapsed all the way into the halving there. Now, a lot of time it's kind of a buy the rumor, sell the news. In this case, we're not looking at a rumor, we're looking at an actual event taking place. But nonetheless, for some reason, crypto seems to follow that. So Litecoin may end up, if Bitcoin does break up, I do expect Litecoin to break up, pardon me, and just follow Bitcoin. But I'm also expecting after the halving, and depending on how this thing plays out, a lot of times you get people selling the news, and I'd be very, very careful. If you're looking to trade Litecoin and you're not holding it for the long haul, I'd be very careful holding it after the halving. A lot of people are going to try to front run that and get out prior to the halving, expecting people to dump it afterwards, kind of the sell the news type thing. But if you're a long-term holder of Litecoin, I'm very bullish on Litecoin long-term, and I do hold some of my long-term hold portfolio. Am I trading it right now? No. All right, Jonathan Quirren, hopefully I'm saying your name correctly, Jonathan. Jonathan Quirren says, great video working. Can you give us your TA on ADA, Cardano, as well as Stellar? Yeah, we can look at that. Let's go ahead and take a look. We'll start off with ADA. And looking at ADA, this is on the weekly chart. Yeah. It does look like, I mean, I will say, I will give it credit. It does look like it's trying to break out. Clearly, we have a nice rounding bottom here. Very similar looking pattern to Bitcoin. Anytime you see a nice rounding bottom like this, that is a signal of a nice reversal. It's just one signal. It is not the signal. I'm not saying that, we are 100% heading up to the moon here. But this is a nice bullish posture here. I will say overall, looking at the big picture, it does look like it wants to break out. That doesn't mean that we can't come down here in the short term, though. It does look like it was trying to put in a nice cup and handle here that was rejected. pardon me, that was rejected. That is a bearish sign, at least temporarily. That being said, looking at the weekly, the 21-week exponential is holding it up as of right now. If this 21-week exponential does end up breaking down, though, guys, things could get bearish fairly quickly. We could see a nice drop down to about 6, at 0.06 very, very quickly if this weekly candle does end up, or excuse me, if the price does end up breaking below this weekly EMA decisively. Let's go ahead and look at the daily. And get an, actually, I don't like these trading view calculator. Let me get to an actual exchange here. There we go. All right, looking at the daily here. Now we're looking at Bittrex. Let's see. Yeah, going from the swing low, we did have a nice little pivot off the 618. I do like that. That is some nice structure, and again, that did bode well for a possible continuation for that cup and handle. It was just a failed cup and handle pattern. And we did try to break up here multiple times, was rejected multiple times. Let me go ahead and just check something out very quickly. Yeah, multiple times here, guys. So a lot of wicks up here to the upside. That being said, we have created a slightly new high every single time. Breaking back down, we are sitting right on top of that 382 as of now. 382 has acted as a decent support, and that 382 does sit right there, literally on top of that 21 exponential on the weekly. Coming back into the daily, daily does look like it's wanting to break down. So yeah, I will say this: if this thing does end up breaking down, we're very likely going to come down here to the 50, which sits at about 0.0713 to be very, very precise. 0.0713, am I going to be a buyer there? Would I be a buyer there? Probably not. Maybe a very quick scalp trade. If that does break down, though, guys, as I said, we're very likely going to break down here. And I would say, I was probably a little bit lower looking at that 0.06. It's probably going to be more like 0.063. 0.063, I'd very, very likely be a buyer here. At that point, we'd be looking at possibly a double bottom. Double bottom sitting right at the golden ratio. That would be a very, very nice buy. So yeah, I'd look for at least a bounce at about 0.063 and at least a nice little bounce off that zone if we do end up coming down there, guys. And that is a big if. I'm not saying that we're going to. As of right now, though, guys, I will say that Cardano is breaking down from this prior low. That is not a good sign. May want to come back down here and test about, as I said, about 0.07 if we get that decisive break. Let's go here to the 4-hour very, very quickly. So if we get a daily open and close below about 0.077, I do think we're coming down to about, I do think we're coming down very, very likely to about 0.07 flat, in my opinion. To the upside, if we can get a bounce off that zone, that's a very, very big if. We do need to take out this upper fib, which sits at about 0.086. If we do take out about 0.086, actually, let me go to the daily. I think it'll give me a better shot. And believe it or not, it actually does look like, let me just see something very quickly. Yeah, we do have a fairly decent support here. So yeah, things could break down very, very quickly if we do end up breaking this zone decisively. Now again, we can wick below it all day long. I have no problem with that. But if we get a daily open and close below this here, or if we do break this trend line here decisively, yeah, I do think that it's a quick drop down to about 0.07, 0.070. To the upside, definitely needs to take out this upper fib at about 0.085. Yeah, really about 0.085. That's going to bring it above the 21-day EMA, and we really need to start trading above the 21-day EMA for Cardano to get bullish here in the short term. Long term, I am bullish on Cardano. I do think once the bulls start running, Cardano is going, and when I say long term, I mean really in the next year or so. Long term, is Cardano going to last? We'll have to wait and see. I don't, fundamentally, I don't want to get too much into the fundamentals of Cardano. It's a very, very theoretical coin, in my opinion. We'll have to wait and see kind of how that plays out. But I do think once Bitcoin starts running, Cardano is very, very likely going to run along right with it, at least for the next year or so. Well, at least for the next 6 months after it starts running. We'll have to wait and see how how Cardano does deliver in the next year or so on their many, many promises. All right, you also said you wanted to look at Stellar. All right, let's look at old Jed McCabe, who I like very much, but this is not a very pretty looking chart. Yeah, we do have an ascending support line here, guys, but it does look to me like it's just trying to flag out. Yeah, I mean, it looks to me like it's wanting to flag out here. We really do need to get above this 21-week exponential if this thing is going to have any hope at all. To the downside, if we do get a decisive break below about 9, or excuse me, below about 0.95, it could be a very, very, very quick drop down to about 0.78, somewhere thereabouts, guys, where I would expect it to find some support at around 0.78 if it does end up breaking down below that zone. Now, if 0.78 does break down, guys, the next major area of support we're looking, we're looking way, way, way down there. We'll discuss that if and when we get to it. But yeah, right now it's kind of reaching a very, very critical zone. Let me go to the daily. Actually, let me go to the daily and let me look at Bitfinex, where we got a little bit more liquidity. Let's see. Looking at Bitfinex on the daily. So we do have potential for a possible double bottom there, which is very real. It does look to me like we do have some, as we said, we have that ascending support line, of course, but even if that did end up breaking, guys, looking at the daily, we do have potential for a nice double bottom bounce if that does play out. Now, that's a big, big, big if. Let's see. All right, sorry, guys. I had to pause the video there very, very quickly. Yeah, I mean, really, if this thing does break down, possible double bottom bounce, though, I'm not putting a whole lot of weight into that, guys, really at all. I do think that the more likely chance of us bouncing, or a much more likely chance, if I could speak proper English here, would be that we bounce right around where we are. If we do break down below this, guys, I'm actually going to get pretty bearish on this thing very, very quickly. I mean, the next target, if this thing does break down, looking at here in the weekly, this just disappears. It looks to me like we're looking at, as I said, about probably at least about 0.082, something like that. But I'm going to be looking for a bounce right. I'm going to be, I should say, not looking for, but if this thing is going to bounce, it very likely is going to be somewhere around here, which could be a very, very quick wick right down below this line, which would make sense, and then a nice, or below this ascending support line, and then a nice little bounce off that zone. If I was wanting to play a very quick scalp off of Stellar, which again I wouldn't, but if I was going to, I would probably put a buy somewhere around 0.0969, somewhere thereabouts, guys. Very, very tight stop loss, knowing if that does break down, we could find ourselves down at about 0.81 very, very, very quickly. Looking to the upside, guys, I'd probably be targeting somewhere around 11.7, 0.117, somewhere thereabouts, guys. And looking at the daily, yeah, more than likely somewhere, yeah, somewhere thereabouts, guys. If we do end up taking out, let me go back to the weekly. If we do end up taking out this prior week's candle, which is going to be sitting at about 0.131, I do think that at that point we do come back up here and test this prior high at about 0.145, somewhere thereabouts, guys. So hopefully that helps you. I know that's not what you wanted to probably hear on Stellar, but we really have got to get up above this 21-week exponential, or at the very, very, very least the 21-day exponential. Until that does happen, I just can't get very bullish on Stellar. All right, Nicholas Alcala says, I put my birthday and allowance money into this at around 10,300. I need this thing to blow. I've been glued to Coinbase. Hey, thanks for having you. Great to have you here, man. Thanks for stopping by. I would just, it sounds like you're pretty young. I don't know that, but I'm assuming that you're talking about your allowance money, that you're very, very likely young. So I will say kudos to you for looking into investing your money. I will say that's very wise. I will say also, please don't make the same mistakes that many people have made. Take advantage of all the free advice that there is on YouTube, and be very careful that you avoid anybody telling you that something is going to the moon or is dropping down below. So I'd just be very, very careful, Nicholas. If you're staring at Coinbase, wanting to, know, should I buy, should I sell? That's not the way to do it. If you think Bitcoin is a good investment, which again, I'm not a financial advisor, it's not financial advice, but if that's what you want to do, I would say invest a little bit into it and forget about it. Trying to buy the top, sell the bottom when you're not a trader, clearly, and you're just trying to learn, is going to drive yourself crazy. You're more than likely going to end up selling when you shouldn't and buying back in when you shouldn't. I do believe, I'm very, very strong believer in Bitcoin long term. Again, that's not financial advice at all. But I will just say, if you're looking at this as an investment, I'm assuming you're not a trader. I'm very much assuming you're not a trader. Then just do that. Hold for the long haul. Yes, look at Coinbase, but do not get don't get emotionally attached to this thing. Even if this thing does end up breaking down slightly, you're very, very highly not going to be able to catch the bottom. So again, just be very, very careful. And if you are looking at trying to get in, trying to get out, if you are trying to actually learn to trade, go to TradingView, open up a free account, and start paper trading. It's completely free of charge, and it'll give you a much better idea of the kind of money that you can make, or the kind of money, more importantly, that you can lose. And with that, just had the alert go off. Let's see, very up there goes Bitcoin moving just a little bit, not much. All right, I think I have my alert set to too sensitive there. But yeah, this quickly coming back to Bitcoin, guys, shifting gears very quickly. It looks like it's wanting to come back up, possibly test top of this top of the prior order structure here, sitting at about 11,400. Of course, this top of this zone that we're very interested in, sitting at about 11,500, obviously. So nothing new as of right now, guys. Still doing its thing. Looks like possible nice little double bottom there, bouncing back up. If you were scalp trading this, and some people have asked me, do I trade the smaller time frames? And yes, scalp trading the smaller time frames, but again, I can't make a video on that because the time I would put something out, of course, it'd be right back in. For example, this little scalp right here coming back down, possible double bottom based on this, looking at nice consolidation here for 3 rows. This little candle right here would have been a very, very easy scalp trade, looking for a nice little bounce. And of course, if you did take that, it would have came down, bounced it, and came down, had a nice little bounce. Probably buying in at the bottom of that at about $10,800, and you'd sell it very, very quickly around 11,000. That's the kind of very, very small scalp trade on leverage that I would play, but that's not the kind of thing that I can put in a YouTube video because, again, by the time I'm putting it up here, I would have been in and out of 10 different trades. So it's just not feasible. So we try to concentrate on the higher time frames. By higher, I mean the 4 hour or so, somewhere thereabouts. Looking at this, though, on the smaller, now that we are here looking at this smaller structure, it does look like we are topping out once again at the top of this structure, possibly coming up a little bit higher here to about 11,435-ish, somewhere thereabouts. I think if we do take out about 11,475, of course, then we got this major resistance right up here, guys. Then I do think we have a good chance of taking that out. Let's wait and see if it does just huddle right below there, or if we do continue to the upside. But again, nothing too significant. Shouldn't even have brought it up, guys. So let me get back to your questions very, very quickly. I know some of you have asked me a lot about institutional money. I guess somebody made a video or something. I don't know. I don't watch many of the others, but somebody made a video based on institutional money saying they're not going to get in, or not going to get in until, do I think they're not going to get in until there's a little safer method for them to get in, thinking that they could get hacked, could get this, that, and the other, basically making the argument that the old money, institutional money, doesn't necessarily understand Bitcoin yet, and therefore they're not going to invest in something that they don't understand. I would argue that they do understand. In fact, I would argue that a lot of people are looking for alternatives to fiat-backed assets, or fiat-backed things like stocks or anything else. I would say that that people are looking for an asset to invest into, especially in this insane environment that we're getting into, with the U.S. debt clock clicking up to about $20 trillion. I mean, and that's just here in the U.S. I mean, we've got major countries racking up insane amounts of debt that are never going to be able to get paid off, guys. Then you get into, I think we touched on this very, very briefly, then you get into inflating the money to try to get rid of that debt. How do countries, this complete scam that is the government fiat, how do you get it? You borrow money, and then how do you pay that money off? Well, you devalue the money that you borrowed, therefore you don't have to technically pay back, at least in value wise, as much money as you borrowed, even with the interest on top of that. So it's this insane game where where governments print money to try to print away, I call it, the debt that they have, the value on the debt that they have. But at the same time, what does that do to the dollars that you and I have? That just devalues those dollars, and then of course we get inflation. Well, what happens when you start to get to the numbers that we're getting to? We're in the U.S., we're topping $20 trillion and not looking to slow down anytime soon. I mean, Bush came in and spent $4 trillion, and everybody thought that was, an insane amount of money. And this is not going to get political, guys. This is not a political show. I am an equal opportunity blaster of politicians. But yeah, Bush came in, spent a ton of money. Obama came in, and as if not to be outdone, literally tripled the national debt, spending more money than every other U.S. president in history combined. And the reason I'm talking about U.S. presidents is because that's what I know. I know many of you are not in the U.S. No, I don't think the world revolves around the U.S. That's just where I live, so that's the example I'm going to use. So Obama comes in and literally spends more money than every single president in the U.S. history combined, and of course does it under the excuse that we were in a recession, not knowing that, just looking out through history, we could have basically done nothing and been in a much better position than we were now. And I know that's a controversial topic, but regardless, no one knows necessarily where that money went. And then Trump comes in and just continues the insane spending, not nearly at the level, but continues the insane spending. So my point is, politicians are spending our money and are spending our children's future into oblivion. So this is why assets like gold are becoming very, very popular again. But the problem with gold is, how are you going to trade in gold? If we do get hyperinflation, look at Venezuela, for example. If we do get into hyperinflation, where people are literally, like they do in Venezuela, taking wheelbarrows of money and wheeling them into stores to buy their basic groceries. It's just not feasible. And it's also not feasible to go walk around with a bar of gold and try to buy eggs and milk. So what are you going to do? People are looking for an alternative, and I do believe that cryptocurrency is going to be that alternative, and I do believe it's going to be Bitcoin. If it's not Bitcoin, it's going to be something else, but I do believe it's going to be Bitcoin because it's truly, really the only main decentralized asset. And I know all the arguments against Bitcoin not being decentralized, et cetera, et cetera. I'm not going to get into as to why I don't believe that, but the bottom line is the world is looking for an asset that they can invest into to protect their money, but not like something like a gold, but not necessarily gold, because you need to be able to buy and sell goods with it. You need to be able to say, hey, I want to buy a loaf of bread. I want to buy this, that, or the other. You can't do that with gold. You can do that with cryptocurrency. So this is why I'm so very, very bullish on cryptocurrency. And though this whole thing started as saying, I do think that institutional money is very interested. We're seeing hedge funds starting to get into it. And it's very, very funny to me when people say that this may not be the bull run that we all thought. And of course, they look to this chart. And the biggest reason I hear people saying that is they look at this $6,000 range and they say, we didn't even acknowledge 6,000. 6,000 was the most important support Bitcoin has ever had. So how could it not have been acknowledged on the way back up as a resistance? Okay, I mean, you're right. I myself included, most people thought that was going to be a resistance. It was not. That being said, was it surprising? Yes, but we also were in a very, very bear market, not expecting the parabolic move that we had. If we go back in time and look at every major parabolic move Bitcoin has had, it has broken through major areas of what should have been resistance like butter, more oftentimes than not. So, to say that just because we broke through this, that invalidates this being a bull run and this is all just pure manipulation, I don't necessarily buy into that. Now, am I a perma bull? No. Could I be wrong in this? Absolutely. When will I say I'm wrong on this? If we do break below 6,500, I'll start to believe this whole thing was a bear market rally. Until that does happen, guys, just looking at the volume, I mean, let's go check volume here. Looking at this chart, this is basically the entire chart from 2016 all the way to present day. I don't want you to necessarily look at the chart. We all know what the price did. I want you to look at the volume. And the volume is just, I mean, the volume is literally double what it was at its peak, or when it peaked out here, was literally peaking out at double the amount that it was at its peak in the 2017 rally. So there's no question that we're getting that new money is entering into this market. Now, I know exactly what some of the people are saying. A lot of that is wash trading. Fair enough. A lot of that is wash trading, but a lot of it was also wash trading back in 2017. And I would say that we are much more aware of the wash trading nowadays. We have many, many sites that are trying to filter that out. I don't think any of them are perfect yet, but many, many sites trying to filter that out, and a lot of exchanges that have been called out on that. So yes, is some of this wash trading? Without question, but so was a lot of the volume back in 2017. So my point is, proportionately, as I talked about on a prior video, that this increase in volume, as well as the fact that we've got now institutional money very interested. We've got hedge funds starting to enter into this market. We know that we've got over-the-counter buying that's just gone insane over the last 6 months. So we know that we've got a lot of smart money that's getting into this thing, as well as the fact that we can see that to say that Bitcoin just didn't acknowledge major areas of resistance on the way back up is just not true. If I pull at if I just look here visually, I can look up and I see here visually that a major area of resistance was sitting right in here, this little cluster right here. was clearly a major area of resistance. I think everyone would agree. Let's go pull here and see what happened. What happened? Price came up here and literally consolidated right into that zone for 1, 2, 3, 4 weeks before continuing to the upside. Let's go ahead and look at the next one. Next major area of resistance sitting right there at about 11,500. Fast forward to today, where are we literally sitting? Right around 11,500. So obviously this is being acknowledged. Let's go to the next one. Next major visual resistance is what? Sitting right up here at about 13,500-ish. Where did price peak out? 13,850, right into this major zone here. And if that's not good enough, let's go ahead and pull our swing high to our swing low. And let's look at each one of these fib levels on the way back up. We acknowledged perfectly acknowledged the 236, coming back up. Didn't really acknowledge the 382. I'll give you that. But coming up, hitting on the hitting the 0.5 right at that 11,500 mark, acknowledging that very, very well, and rejecting right inside the golden pocket. The major rejection of this, the biggest rejection of this entire bull run. If you want to call it a bull run, let's just call it an uptrend. The major rejection was right where you would have expected it, right inside that golden pocket, which just happens to be that major area of support, basically from December all the way through its collapse in February, or excuse me, in late January. So those prior areas are in fact being respected on the way back up. Now again, I'm not saying that you are 100% wrong and there's absolutely no case for this being a bear market rally. Until we do break up above, decisively up above this golden pocket, I will say that yes, we have rejected right at the golden pocket, and the bears would say that's right where you would expect a rejection and then a continuation back to the downside if this was a bear market rally, and I would say to that, fair enough. Now I would disagree that it looks perfectly and that we have a perfect rounding bottom and that we have, you know, that massive increase in volume, etc., etc., etc. Many reasons for this being a bull run, but you have an argument until we do take out this golden pocket. I will say once we decisively take out this golden pocket though, and that's going to be a decisive break above about 14,000. Once that is broken, I don't think you have much of an argument for this being a bear market rally, and hopefully you'll be able to change your minds. But until then, yes, I'm not a perma bull, I'm not a perma bear. I will change my mind in a second if we break below 6,500. But until that does happen, guys, I do believe this is I do believe that we are looking at the start of the bull run, even though we are looking at a clear correction as of right now. All right, guys, you've heard me ramble long enough. I didn't intend this video to go this long. Hopefully you enjoyed it. If you do like these kind of discussions, more longer format, let me know. If you just find them completely boring, let me know that as well, and I'll just go ahead and I'll stop doing it. So let me know, guys. I'm going to go ahead and wrap things there. If you do have any comments, questions, suggestions, as always, just let me know, guys. Till next time, please trade safe. Take care of yourself. This is Working. Signing out.